Hey guys, welcome to the Horton Digital Podcast, the show that's all about creating more opportunities in life and business through the digital world. So today we have a special guest, Stefan Wyper, who hosts the YouTube channel Money Gang Crypto. He's going to be dropping some knowledge on what's going on in the current crypto market. So if you've been in crypto for a while, or you don't know your Bitcoin from your Shiba Inu, this is definitely one that you don't want to miss. So Stefan, how are you doing today, man?
I'm doing well, man. How are you?
Yeah, I'm really good. Really good. Thanks for asking. So tell us a little bit about yourself and how your journey in crypto got started.
Yeah, good question, man. So basically, let's say I started investing a little while back, about, I want to say 6 years ago. And for me, I was in like the traditional financial markets, stock markets, things of that nature. So my goal was it started off with the S&P 500. Like a lot of people, they want to be very conservative with their gains. And you hear the old phrase, okay, invest, every week until the end of your life, basically, and you'll be a millionaire, right? Like you can retire. So that was the first thing. And then I started researching companies, started looking into companies, looking at different markets, got into quite a few stocks and did all right from them, did quite well from them, particularly around the pandemic time as well. I was doing very well in terms of buying up the dip, because there was a massive big dip. We had a mini recession. The smallest recession in history was the pandemic. So I was buying up some stocks, made some returns off of that. And I think the thing that people were talking about crypto, people were talking about the next run, and the run was coming up to the kind of 2021 run, which was, if you know about the 2021 run, legendary in its run, incredible gains, particularly for Ethereum and a lot of DeFi. Called it DeFi Summer, and next thing you know, it was like people were more aware of crypto than ever before. Shiba Inu ran up, Ethereum ran up, Bitcoin had run up to 69k or 66, depends on what your charts are, and you really saw like an incredible gain in crypto, and there was just such better great gains in crypto than there was in traditional finance. But at the time I had my own stocks, and so I bought a little bit of Ethereum. I like what Ethereum was about, so I bought some Ethereum, but I didn't overly invest. It was kind of like, okay, this is going to be my risky portfolio, so I'll put money into that. Then if a lot of people remember, there was the whole thing with GameStop and AMC. So many of you will know or may not know the story about Wall Street Bets, which was a Reddit forum. And that was where my mind changed about traditional markets. I understand at that point that the game was rigged. I didn't like the fact that the game was rigged. So to give a bit of an idea of the story, essentially there was massive big hedge funds that had decided to short the heck out of GameStop. Wall Street Bets, guys who are your average guy, right? Like a bunch of them were talking kind of trading, and they're usually buying penny stocks. It was a bit of a degen kind of trading platform, and there was an easy way to access trading through Robinhood, which is a trading platform that you could use in the States. And so people were talking about, hey, they've really overshorted on this stock. If we are able to pump the price up of GameStop, regardless of core fundamentals, like GameStop is an old, gaming company where you can buy and sell games and resell, old games and stuff. If we buy up the stock of that, the shorts will be put in a place where they will have to buy up the stock to pay off their short, and that will then pump the price, and then it will go into like a hyperbolic price pump. So what had happened was, this happened, and the hedge funds doubled down on their shorts. So when they started to see this pump, they decided to buy even more shorts, which then created a kind of hyper cycle whereby the price of GameStop skyrocketed. And then it made the news, and then Wall Street Bets was all over the place. And what you saw was people kind of sticking it to the man, and these hedge funds having to liquidate themselves to a degree and have massive losses. Now, the reason why I bring up that story, because the most important part of the story is that the game is rigged. So what I mean by that is, when I went to go purchase GameStop, and a lot of people did, there was a halt on Robinhood, on Trading 212, on many trading platforms. There was a halt to buy the stock. So you could hold the stock, you could sell the stock, but you could not buy it. because there was a risk of a financial collapse. And the idea behind it was to protect traders, and traders didn't know what they're doing, but I thought it was a free market economy. I believed in the idea and the principles that it was a free market economy. And at that point, I was completely baffled. You went on most trading platforms and you could not buy the stock. You could not buy the stock. So if you wanted to buy the stock, you couldn't buy it. And I was like, they are literally protecting a bunch of hedge funds. And then you find out that Robinhood was actually, there was part investment from some of those hedge funds that lost so much money from GameStop. And so it's a completely rigged game. And, a lot of people would argue that, a lot of people would disagree with that. But to me, at that point, my disgust for stock trading was at its all-time high. I realized that this is a corrupt system. I fucking hate it. Excuse my language. I hate it. I'm not about that. And at that point, I turned straight into crypto. Not to say that there's no scams, there's no corruption in crypto. However, it's 24 hours a day, 7 days a week. You can trade whenever you want. It's very volatile, but with that volatility, there's a lot of gains to be made as well. And it was made by the people for the people. That's the principle. It was peer-to-peer digital currency. That was the goal of it at the beginning. It was invented after the financial collapse in 2008. The white papers that Satoshi had put out was after that terrible collapse of the financial system because of stupid mortgages, you can watch the film The Big Short that will explain exactly what was going on. And so we live in a system, and it's very important to understand the financial system. The financial system is making your pound, your dollar, your euro weaker and weaker and weaker. It's inflationary in its nature, and it will continue to be inflationary. The only reason we're starting to see it now is because most people didn't realize how inflationary it was, right? The fact that they want inflation at 2% just tells you that why do they need inflation at 2%? Why can't it be non-inflationary or deflationary, right? There's an idea about that has to be inflationary. And you would always that prices would be slowly going up, but you would never see dramatic increases. Only after the pandemic, when they printed a crazy amount of money, trillions and trillions and trillions and trillions of dollars, that we've now seen inflation, hyperinflation happen, and we're starting to see the effects of it. Interest rates at an all-time high and going up. We're starting to see massive issues within the financial system. It's all based on credit. It's all based on fiat. When they moved from gold to fiat, the whole system changed. They can print money out of thin air, and they can continue to do that as well until your pound, your dollar, your euro is worthless. And so this cost of living crisis, many of the issues have occurred because of the system that we're in. So at that point, I was like, nah, I want to get out of this system. And deflationary assets such as Bitcoin, Ethereum, things of that nature, they're designed in their nature to be deflationary, or at least net deflationary. So for me, it seemed like a bit of a no-brainer. A lot of people may argue that. For me, it seemed like a bit of a no-brainer. And I'm a libertarian. So my viewpoint is kind of anarcho-capitalist / libertarian. Don't believe in governments, don't believe in systems of power, don't enjoy it, want it to be as minimalistic as possible, believe that they're trying to control the people. Maybe I'm a crazy guy, but that's where I'm at.
Yeah, I completely agree with you, man. Yeah, the less people we have in government, I think the better. And yeah, they could fire half of them and it probably would be a much better run in a much better way, more efficient way. So in the last few months in crypto, we've seen the market crash. We've seen the end of the bull run. What is going on in the markets right now?
So we are probably coming... I don't want to speak too quickly on it because we're in a very unique scenario right now, right? So for the first time in a very long time, we've started to see the Fed increase interest rates, and that plays a part in all financial assets, not just crypto, but more so with crypto because crypto is more volatile. But we've had basically an incredible bull run, which was 2021, and as a result of that, you usually get periodically about a year from the all-time high, you see the all-time low of Bitcoin, and as a result of many other cryptocurrency assets. So essentially what's happened is they've basically hardened the dollar. They've made it harder for you to get access to the dollar. Credit's become harder and harder and harder. They've also been increasing those interest rates, and that has had the direct correlation with spending, with employment, with things of that nature. You're starting to see it with the real estate market. You're starting to see it with employment. Employment rates. People are cutting jobs left, right, and centre in tech jobs. the figure that they give you is that the employment rate is growing. However, if you look around, like how many articles have you seen within the last 2-3 months of Google laying off people, Tesla laying off people? You know, what was the other one that was Microsoft laying off people, Apple laying off people. So so we're in this weird stage where I think we're in what would be called kind of capitulation stage or kind of sideways action. So we're going to see a lot of that. But we've had a lot of big bear events, and this is typical of a bear market. But I think what's really collapsed, we had 3 Arrows Capital that collapsed. We had Celsius that collapsed. We had FTX collapse. We had BlockFi collapse as well. So massive big bankruptcies, massive big kind of rugs in mainly the centralized finance side of things. So a lot of the protocols that were in crypto but were exchanges, currency exchanges that you could use, you started to see those collapse. But this isn't the first time we've seen collapse, right? We've had things in the past. I can think of the Canadian. We've had Mt. Gox. We've had the Canadian exchange that went bankrupt. For those who remember Gerald Schultz. So there's a lot of events that happen. In terms of where we are in the markets, that's where we're at the moment. So we're going to be coming out of the bear market now and probably start to see a lot of sideways action towards recovery. It's part of the cycle. It's usually a 4-year cycle with crypto. Simply put, you have what's called kind of 3 years of bull, but it's not really bull. It's kind of like sideways action, moving upwards, and then you come to the all-time high. When you hit the all-time high, you tend to see a massive drop-off. It could be 80 to anywhere between 70 to 90+% drop-off, and then you start to see recovery. Then you start to see more movement towards the upside, then coming up to the next bull run. So you start to see a 4-year total cycle, 3 years of this kind of sideways action going towards the upside, hit the all-time high, and then a drop-off. And that is your 4-year cycle, your typical 4-year cycle. And so there are some interesting events that are going to be coming up. We can talk on those types of things that are bullish in nature. Where I see it going right now, I think we're going to see sideways action.
You mentioned that the media are kind of making it out to be less bad than it actually is. Like they're making out there's loads of jobs. Why would they be doing that? Why would they be lying about it and making it seem better than it actually is?
Why would the media be lying? that's their jobs, right? Clicks, clickbait. I mean, it's really interesting to see what the media say in this bear market, right? Or what they have been saying. So one of the it's really interesting because you know when you're near to the top, or you're going to be near to the top when the prices are going towards the all-time high or are at the all-time high, and everyone is talking about crypto. So this is a thing, you know, to take into the next bull run is if you're hearing taxi drivers talking about crypto, if you're starting to see loads of advertisements on the tube or wherever you live, you know, you're seeing advertisements all the time for crypto. If you're hearing the news being positive and talking about new crypto millionaires and things of that nature, hey, you're near the top. And when you hear the opposite, it's quite the same as well. So if you're hearing it's all going to zero, so many people got wrecked, it's been destroyed, you know, all the media being negative, usually that's probably a good time to purchase. It's probably a good time to buy, especially if it's dropped 90%, if it's dropped 85%, dropped 80%, you know. Because the sentiment in the market has become bearish or bullish. Why do the media lie? Why do they talk these things about employment? I think it's really... So some of it's got to do with the government, right? And so a lot of the Democrats in the States, particularly Biden's administration, have pushed this idea that we're not in recession. So a recession is 2 quarters of negative GDP growth, right? So we've had that already. And they defined it as... Well, it's not actually, even though that's the technical definition, in every economic class that you could ever be in, that's the definition of a recession. It's not a recession because the employment rate's really, really high, right? And it's growing. And this is the argument. So what will happen now, right, is as you've seen the interest rates go up, and they're going to continue to grow up, but we're going to see what's quote-unquote a soft landing A soft landing is basically the Fed not increasing the interest rates as crazy as they done in 2022, because you saw 75 basis points, which is 0.75%. You saw 50 basis points, which was half a percent interest rate. You saw these big jumps to try and combat inflation. What you'll start to see is you'll see 25 basis points like we had at the January meetup. Then in the March one, you'll probably likely see another 25 basis points. So it'll be what's quote unquote called a soft landing to combat inflation and try and bring it more towards that 2% rate. I believe they're saying it's around about 6% the last time I checked, which, yeah, to me is cap. But that's the reason why they talk like that. They want people to be stable. They don't want full-blown panic. They don't want they want people to trust in the dollar. The dollar is the reserve currency of the world, and it is the most exchanged currency around the world. So it's very important to keep trust and viability within the dollar. And so it stops people from also putting their money elsewhere. It keeps people buying things like bonds, things of that nature. Keeps the economy stable. So you have to keep the sentiment. You have to keep the sentiment good, because you possibly could lose your reserve currency status, right? If you're the US, you don't want to be losing your reserve currency status. It makes you the all-powerful country within the world because people trade with your currency. So it's very, very important to you to keep that sentiment. And so that's probably why you're starting to see a lot of that in the media. What will tend to happen now is that the narrative will change. So the narrative will be, so you start to see unemployment occur, and you start to see employment rates go down per quarter. What will be interesting is like, oh, look at what we've done. We've been able to combat inflation so well. We've brought it down from whatever it was. I think it may have been 11% in the States or something like that, down to 6% or 5% or 4%, whatever. Look how good we've done. But the narrative will change, and no one will talk about the employment rates, right? So that's where we're at, I believe, in the markets.
Yeah, I'm sure it has a lot to do with the election as well.
Sure. Yeah.
How they want to be perceived. Like whenever Trump was was elected, and then when he was in his presidency, he took pride in the fact that the economy improved. So I'm sure Biden doesn't want to look worse than he did anyway, even though he already does. But yeah, definitely must have some sort of impact on that as well. So correct. At the moment, you're currently all in on crypto, or do you still look into any other asset groups?
Yeah, I mean, so I'm in a lucky position where I have family who are heavily involved in real estate. So yeah, I've never really worried too much about that because it's part of my legacy, and that's a very lucky place to be in. Mm-hmm. So yeah, what other assets do I like? I would love to get involved more with the watch game, although it had a bit of I like watches. That's one of the things that I like. I think real estate is a good investment. It depends where you're buying. So the laws are changing, and they're going to make it way more harder for individuals to buy houses. So the housing market may take a hit. Landlords are getting killed left, right, and centre with legislation and regulation. So for me, I think the easiest way would be stocks and crypto, and I find the crypto markets to be a bit more free market. Not to say you don't get scams, you don't get rugs, you don't get all the issues that you may have with many other investment forms, but more so in crypto. However, I'm a big fan of crypto. I think it's performed the best over the last few years. It's done, if you had it on a long-term scale, since 2008 when it kind of first came into existence, the gains have been astronomical. There's no financial asset that's done as well as crypto since the beginning. So to me, it's a no-brainer. And these kind of super cycle, crazy volatility may not last for a long period of time. We may see this in maybe the next cycle and then the following cycle, and that may be it as more regulation and legislation comes in, as more centralized authorities come into it. So it's very early, it's very, very early in the markets and stuff. So we'll see what happens. But my sentiment is pretty much all in on crypto, or that's not to say I don't play around with some stocks, but to me, like a 5 to 10% gain per year on the S&P 500 is not beneficial. When you can do, for example, in this bear market, I'll give you a pure example. There was a 14x, which 140% gain on Hedron, which is a DeFi protocol. Or, when you hear of like 10,000x, 1,000x, 100x X's in a bull run, the typical recovery is about 50 to 100x from the bottom to the top in a bear to bull sentiment, so a movement from the bear market to bull markets per cycle. So it just doesn't make sense, right? And when we say 50x, add a zero onto that, and that's you're talking a lot of percentage wise. So for me, it just doesn't make sense. Yeah, the gains are why you're in it, right? Like, it's not about the technology. It's not about, people have this bullshit narrative that they're in it for the tech. Yeah, no, bullshit. You're in it for the gains, man. Like,
why do you buy anything? Why do you invest in anything? It's to make money, right? To grow your wealth.
Yeah, you're not a developer. So if you're not a developer, then how are you gonna? Yeah, I just hate that narrative. Like, I'm in it for the tech, and it's like, nah, you're not. You're in it to make some money, bro.
Yeah. So you mentioned Hedron. On your channel, you talk a lot about Pulse Chain, Hex, and the Richard Hart ecosystem. Hedron's obviously a part of that, right?
Yeah, 100%.
So what makes Pulse Chain and all of his other projects so important versus his other projects?
So let's talk about the most controversial person in crypto, which is Richard Hart, right? Let's get that out of the way, right? Some people think he's a scammer, some people think he's God, some people think he's the smartest man alive, very highly intelligent individual, right? Either he's the greatest scam artist with the longest running scam in world history, or he is a genius. And I have the sentiment that he is a genius, okay? He kills Bitcoin maxis all the time. He points out that Bitcoin's an old product, it's not a new product, it's near the top of his S-curve, so if you read S-curve adoption charts, it's near the top, right? Like, the gains are going to be way less than say, for example, Ethereum. So any Bitcoin maxis in the chat who are watching this, listen, you're going to get ruined by Ethereum next cycle. I hate to say it, but the gains in Ethereum versus Bitcoin is going to be crazy different. I wouldn't be surprised if Ethereum flips Bitcoin in the next cycle. But
that's a big statement.
What can you do with Bitcoin? With all due respect, what can you do with Bitcoin? Slow transactions, old tech, can't build anything on it. It's crap. Like, Ethereum, you can build so much on it. You can build so much. So to me, it has use case, and they've gone from proof of work to proof of stake. I think it's much better for the protocol. It's now becoming net deflationary as well. So that's very impressive.
So just owning it, the fact it's deflationary, it goes up in value. It becomes more scarce. So yeah.
Well, let me be very clear. It becomes net deflationary. So when a network is near capacity or being used at capacity, because they have something called EIP 1559, you can look it up if you want. It's essentially a burning protocol that it takes a portion of your transaction fee and burns Ethereum away, and as a result of that creates deflation. So This is a kind of new thing that they've put in one of the upgrades, and it's made transaction fees beneficial to the network. So yes, it is net deflationary, which is impressive, and it's going to be even more impressive when you hit the bull run, because the bull run, gas fees are at all-time high because the networks are almost over capacity, right? People are making loads and loads of transactions, loads of protocols are being built on it. People want to get into new protocols, and the price of it goes up. So what you'll start to see is that the net deflation rate will be much higher in a bull run, with more use than in a bear run, because people are buying if they're big into crypto. They're buying in this bear market, but the average investor isn't buying right now. They're kind of getting wrecked. So they have no use case for it. But the next bull run, you're definitely going to see that net deflation, which is impressive, right? Like there's very little places where you can put your money whereby you see deflation, right? Most things are inflationary within nature, and trying to keep that inflation low or even to an absolute minimal is impressive. That's one of the benefits of Bitcoin, right? Like a lot of people say there's only 21 million Bitcoins, and they basically reduce the inflation every halvening, and that's another important point, right? Bitcoin will see an increase in price, and one of the major key catalysts of that increase in price will be in April or March 2024 when the Bitcoin halvening happens. Historically, a Bitcoin halvening happens 15 to 16 months later, you see the new all-time high. You see a brand new all-time high from that halvening. So just to explain, essentially what happens is they use a proof of work mechanism where you have to use computers and GPU in order to mine Bitcoin. So the miners get a reward for that, and that reward gets paid to them for mining a brand new block, a new block on the blockchain. What tends to happen is they get a certain amount, that figure is set, and that's how much Bitcoin they get, and they get paid that. What happens at the halvenings is that amount gets halved. So the rewards to the miners goes less and less and less every 4 years, making it less inflationary. So at those points, it has a significant effect, but you don't see the effect until there's a slight delay, right? You don't see the effect on the network until about 15 to 16 months later, but it's also a bullish indicator. So it makes a massive difference onto the network when halvening happens and the result of that. So it's going to be interesting to see, and that would put you into 2025, which I predict will be the next bull run.
So you mentioned a little bit about gas fees, ETH gas fees actually being reduced because they're burning away some of that ETH. Let's talk about Pulse Chain. Pulse Chain is being launched soon, which one of the benefits of that is lower gas fees, reduced gas fees from ETH compared to the ETH ecosystem. So for someone who has staked in Hex already, which is one of Richard Hart's projects, if you don't already know, if Pulse Chain launches before their stake ends, let's say they've staked it now, if Pulse Chain launches before their stake ends, will their gas fee be lower on their original stake when their stake ends?
Your question is basically, if there's a stake in Hex before Pulse Chain launches, will the cost of gas fees be less
when Pulse Chain launches?
Yeah, good question. So it all depends on when Pulse Chain actually launches, right? But you get a copy on Pulse Chain, right? So let's say your stake is, let's say Pulse Chain launches in the next 6 months. Let's just say that, and your stake is 12 months time. So you're going to pay a fee on Pulse Chain, you're going to pay a fee on Ethereum, right? You're going to pay a fee on both. But the thing is that the gas fees on Pulse Chain is paid in Pulse. It's not paid in Ethereum. And the gas fees on Pulse Chain is ridiculously small. We're not even talking a cent here. We're talking ridiculously low prices. There's more throughput. There's more blocks being put through on Pulse Chain as well. So the transaction speed is approximately 5 to 10 times quicker than on Ethereum. The size of the blocks are way, way bigger than Ethereum. So that's what a lot of people like about Pulse Chain, is that you're getting a direct copy of all of the ERC20 tokens. For those who don't know, that's Ethereum-based tokens. Anything that was made on Ethereum gets copied across onto Pulse Chain, one for one, like for like. And as a result, you can play around with your favorite asset on Pulse Chain. So very similar in a sense to Binance Smart Chain, and very similar in a sense to, for example, Solana, just without all the issues and the bugs and the hacks and, the network's not shutting down for 24 hours or 48 hours because Solana's crap. Those types of things. And it's a free airdrop. It's the first time we're ever going to see a massive big free airdrop of all the tokens that are on Pulse Chain. So coming back to your question, will it be cheaper? Will it be not? you might see a crazy amount of network activity around Pulse Chain launch or coming up to Pulse Chain launch. So maybe not. Gas fees. It all really depends on what's going on at the time for Ethereum. If a new projects are being launched on Ethereum around that time, like a pure example of this was Zen Crypto, started by Jack Levin, when he launched his coin, the gas fees went astronomical again because so many people were trying to mint it, and it was a minting based protocol that you can mint as many tokens as you wanted to, and then that just smashed the ETH gas fees. So it really depends on the network activity at that time. That would be my answer.
I was watching Miguel from Dollar Cost Crypto, and he was saying that with your staked HEX, let's say your stake ends whenever the price is very high. The higher that price is, the higher the fee is. The gas fee is to unstake, so it can actually eat into a lot of your profitability. Actually, when you unstake, if that price has increased a lot.
Correct. There are ways around it, or there are ways that people are getting around it. So one of the ways that I'm really liking now, there's a few different things, is that. So Alex, who's a developer, he's just part of the community of Hex. He's big in the community. He created Hedron, Icosa, but he also created HSI stakes. So the ability to tokenize a stake into an NFT. So not only does it kind of allow you to be able to sell it on the open market, so it gives you liquidity of it, but it also allows you to, if you want to put it into the distant future, you can create stakes through that. Now, pre-existing stakes that are already there, like, you're going to just have to put up with it. But one of the ways that a lot of people are getting around it is, tokenizing it. The other way that people are getting around the gas fees is putting it into what's called a DAO. So a DAO is basically a grouping of, say, Hex. It could be anything, but a grouping together. The best example I can give is probably raising capital between a group of investors and then staking it out. And that way, when you stake it as a DAO, you have one gas fee to pay at the end. So it'll be a massive collection, but it gets the most amount of yield possible, and it only pays one gas fee instead of like 100 or 1,000 different users paying individual gas fees on their stakes. So that is another way. I like the perpetuals. The perpetuals have a yearly one. They have a 3-year stake. They have a 7-year, 10-year, and a 15-year stake, which is Maximus. You've got Base, Trio, Lucky, and Desi. Those are the names of them, and those allow you to participate that, get more Hex, also not have to pay the gas fee. Only one person's going to pay that gas fee, and if you don't claim it at that point, it just automatically restakes for another 3 years or 1 year or whatever you're in. So that can be a way around it, but yeah, it's going to be a major issue. I really do think until ETH is unable to shard the network, so by sharding the network, they're going to be able to make the gas fees way lower, but that may not happen in the next bull run. I could see it in the bull run after that, but it doesn't look like that. It took them ages to get to market with ETH 2.0, so sharding's a much harder task, and I think it will take longer for them to shard.
Yeah, definitely. What are some other projects that you see a lot of potential in for the next bull run or the coming months and years?
Sure. I mean, there's quite a few, right? Like, I think anything that really survives this bear market has use case and community, then it will do well. So, for example, the Cardano community are a fairly big community, and they're quite loud as well. So I wouldn't be surprised if we see ADA do well, right? Charles Hoskinson's a very cool guy. I listen to some of what he talks about. I like him as an individual, so that'll be quite good. AI coins will be the next big thing in the next bull run. Okay, it will be a narrative, kind of like NFTs were a narrative, kind of like dog pictures have been a narrative, and Shiba Inu was a narrative. It's one of those things where it will be a big narrative. So AI-based calls and based protocols. The other thing, if you want to diversify yourself. 2 seconds. I'm gonna cough. Excuse me. Another one that you may want to consider is what I call the WEF coins, which is the ISO 20022 coins. I'm going to cough again. Sorry, guys. Yeah, I'm just going to take a sip. Sorry about that, guys. So, the ISO 20022 coins. So you've got things like Algorand, XLM. They're known as the WEF coins because they've been approved by the WEF. They've been approved by a lot of big authorities like that. And I'm not a big fan of WEF. But however, if legislation's coming in and regulations coming in, you know, the coins that are approved may do well. Ethereum, I have very little doubt that Ethereum will do well in the next bull run, for sure, because so much stuff is getting built on it. It's becoming a blue chip, a placeholder. Bitcoin, I think they would. I think a lot of people are saying 100k next bull run. I think that we. I
guess it's that compared to the last all-time highs. What is that, like an extra 40%, really, isn't it?
Yeah, I struggle to see. I see it at about 80 to 100k. That's where I see it. This idea, the problem with Bitcoin is not only has it been around for so long, but and this narrative that I'm going to steal from other people, but the idea is that the world's richest man is invested, massive big hedge funds are investing or have invested. You know, a country's adopted it as its national currency. How much more can you move it, right? Like, the liquidity in it is really big. So you need a significant chunk of money in order to move price performance to the upside. Like, you need a lot of money. So the argument, a lot of people say, well, it's got lots of liquidity and you can enter and exit your position way easier when there's lots of liquidity, but it also kind of stops price performance to the upside if you understand how liquidity works. So when I see coins that are super liquid, it can be hard to get your money in, get your money out, and make major moves. So do I see massive price performance compared to Ethereum? Nah. Do I see it compared to altcoins? No. Polkadot is another one. It did a 95% drop, and so that will do well. Obviously, I'm going to shill my thing. I love Hex and the Hex community. I think that will do well as well. Low liquidity, massive community behind it, cult-like in nature, just relentless. A form of yield that you can have trustlessly, where you don't give up your admin keys like you do with Celsius. You don't give away your crypto to someone else. That it's just you and a protocol, you interacting with code. I'm a big fan of it, right? But Pulse Chain will be big, man. Layer 1s do well. They'll be big. So I wouldn't be surprised if we see Pulse Chain do really well in the bull run. It's got to have market fit. It's got to do well. And so there's a few examples that I would give.
Yeah, I would definitely agree with some of those in there. So how much money would you say someone would need in a first world country to be considered rich in 2023? With inflation and everything going crazy right now, the economy, like,
that's
$1 million isn't what it used to be 10 years ago.
It's not. I say 20 mil upwards. Yeah. 10 to 20 mil upwards minimum.
Yeah.
The reason why I say that is one, inflation. I don't think inflation is going to stop. Right. I think that we'll have periods of deflation, if you want to call it that. This current stage is not really deflation, but what they're trying to do is raise interest rates to create deflation reacts. But I think we go through this cycle, right? Like, people forget that whenever the interest rate goes up, not only does it affect the rest of the world, but it also affects the Fed and the American economy, because the Fed, they have debts around the world. They have debts, massive amounts of debt, and they have to pay back that debt with interest, and that interest rate is set by them. So when they increase the interest rate, when they got trillions and trillions of dollars of debt, they are also kind of shooting themselves in the foot as well, because their interest rate go up as well every single time they increase the interest rates. So on their debt. So I think we see these cycles. I mean, if you want to go full conspiracy theorist, I got a feeling that they completely destroy the financial system as we know it.
I was going to ask you that. Yeah. I was going to ask you, can you see that? Because it feels like now, everything is just coming to a climax almost. Like it's just reached a point where everything feels fucked. So it has to, like, where do we go from here? Do they keep printing more money? Surely not.
Well, the idea will be that this financial system collapsed and that you need more safety, regulation, and help. And so there's kind of a few new ventures that are happening. AI are going to take over the world, right? Artificial intelligence is moving at a rapid rate. And OpenAI have talked about this and the issues that come with the advancement of AI. And robotics is moving at a very quick rate. You just look at the videos of Boston Dynamics in the last 5 years, and it's scary how quickly it's moving. So what will happen is that the AI and robotics will take over many businesses because it's quicker, it's cheaper, it's more efficient, it's works 24 hours a day, 7 days a week, doesn't need a holiday, doesn't need a break, doesn't need to get paid, it just needs to be, maintained. Which will leave a lot of people out of the workforce. Most people thought it was going to be the smaller jobs that were taken up first, and then the higher positions would be last to go. It's kind of the opposite, really, right? Like copywriting now can be completely automated through AI. Things of that nature, like coding,
University.
Yeah, there you go.
Yeah.
Multiple different things that are high skill. Let's take coding, for example. AI is able now to create code. It's able to create code in Solidity. It's able to create, crypto-based contracts, ERC20s. It's able to create websites. It's able to create all the things that you needed to outsource sometimes. It's taken over. Now, one of the things that OpenAI is moving towards is superintelligence. So this first version of ChatGPT, and a lot of people have been focusing on this. If you don't know about it, you need to research it. Highly recommend go check out Alex Homasi, and he's got a great video on AI. Superintelligence will be whereby it has so many data points that it can configure and work better than humans can. And at that point, it'll come up with solutions. The speed at which you'll be able to come up with a solution will be just better than outsourcing to anyone, right? It'll be smarter than human beings. And so we're left in a position where most of the job market will be, people will be unemployed. And as a result, they'll need a universal basic income. So OpenAI have been exploring a universal basic income, a form of income that gets paid out. And what's the best way to pay it out? Through a digital currency, right? And what's the best way to get a digital currency? A central bank digital currency, which is already being proposed in the UK. It's already being proposed in Australia, in America, in Europe, in multiple different countries. They already rolled it out in Nigeria. They've already rolled it out in many different places. And they're going to get rid of cash. The older generation use cash. Once they die off, they'll get rid of them. They'll get rid of cash. They're reducing the amount of cash that will be circulating. You may even have a pandemic that suddenly no one accepts cash anymore. Not a conspiracy. Maybe a conspiracy. And then on top of that,
all these conspiracy theories are coming true, though. That's the thing. Like, people call you a tinfoil hatter, and then a year down the line, it all comes to fruition. So,
bro, I didn't believe in conspiracies until the pandemic. I'm going to tell you right now, I didn't believe in a single conspiracy until the pandemic, and then it became true afterwards. And my reflection, I've made ill-advised decisions because I've been too arrogant to take up some of the conspiracy ideas or run with them or explore them. 100% is arrogance when when I look back on the past, and I really, I'm a bit ashamed of that, but that's life. You learn, right? So
yeah.
But it's true. A lot of things have come true. Alex Jones was talking about Epstein's Island ages ago, and now we all know about Epstein's Island, right? So, I'm leaning more towards conspiracy theories, and again, the idea of theory, the word conspiracy theory came into fruition from the CIA to try and devalue the information that was given by people who had conspiracy-like tendencies.
Yeah.
To make it out as a theory. So
that's it.
Yeah.
They'll label you. They label you something in order to kind of demonize it in a way.
NPC culture is at an all-time high now, right? And fake news and I'll call this news confusion is at an all-time high, and it's going to get even worse with AI, because essentially you can make deep fakes from AI now. So you'll be able to make essentially a video is loads of pictures coming together all at once. So if you do that on a quick enough basis, if you put enough pictures together on a quick enough basis, you can create a video or a movie, and you could create a massive deep fake of political figures. You can do deep fakes of individuals by having enough pictures, doing a certain scenario quick enough. And so we're going to start seeing a lot of that. The blue check mark is going to be really important for verification nowadays of which videos are real and which videos not. So you're going to see a lot of that in the future, which will be interesting. Again, scary. Yeah,
you almost need to see something firsthand, like in person, to actually know if it's real or not, because some of the video footage you see it looks so real, and it's very easy to be manipulated. And I think AI as well, they can tap into that human emotion, so that will be very easy to fear mongering and how to scare people, manipulate the masses. It will be, it's a very scary future that we're going into. So we'll just have to watch it all unfold, I guess.
What about relationships, man, as well, right?
Yeah.
So how will the relationship dynamic change? How will people interact and start having relationships with a form of artificial intelligence and robots, right? Like if you're able to design a robot that looks completely like a human being, almost has the same flesh and same capability of being a human being, has no sexual complaints, understands you and is able to read your responses and give you positive responses, and able to read you inside out, it's going to change the game, because you'll start to see quote unquote unconditional love for the first time between a robot and a human being, which is scary to say, right? Like,
sign me up, baby.
Yeah, exactly.
I'll get me a robot.
It'll be interesting to see. Yeah, robot wives, right? Like, I know it sounds a bit quirky and a bit crazy, but you can do whatever you want with a. I don't know. We're starting to get into Westworld. We're starting to talk about that kind of stuff. That's a crazy.
This is meant to be a crypto podcast.
It all is interlinked.
Yes.
The future is interlinked. Macroeconomics, AI, futurism, if you want to call it that, crypto, it's all interlinked. Crypto is just the financial side of things.
So let's say you say 20 million. If someone was to make 20 million investing in crypto, do you think it would be wise to then diversify, say into other assets like real estate, index funds, watches, or stay all in?
Yeah, so my argument is, people say, you need to diversify, diversify, all this crap. How can you diversify if you're only able to put in, say, 10K?
Yeah.
Right? The amount of X's that you'll need to make to hit the figures that you want to hit is going to be really difficult, right?
Yeah.
Let's say you want to make $1 million from 10K, well, you need 100X.
Yeah.
Right? So it's very hard to do that if you're spread thin. If you've got 1,000 here, 1,000 there, 1,000, it's very good to say. A lot of the Warren Buffetts of the world, and you can listen to Warren Buffett. You might look at this stream and think this guy's an idiot. But here's my argument against what Warren Buffett says, is that he can diversify because the amount of money that his ability to put in is very, very significant, right? When you've got 20 million plus, when you've got $100 million to diversify with, it's massive amounts that you start off with to diversify and make X's on, right? So,
Yeah.
so my argument is that if you put it in the S&P 500 and you let it do its thing, inflation's going to eat it up at this current rate.
Yep.
And it's not changing. I don't see it moving much. I see moments of deflation like we're having right now where they're trying to deflate it through interest rate hike increases, and then more printing to create more inflation, and you're going to just kind of see this cycle. Maybe not as severe as it has in the past, but it may be even more severe. So this idea of diversification, yeah, if you make your money, why not diversify, right? It's not bad to diversify your assets, but you have to make the money first. You have to climb the mountain before you can see the view, you know? So you have to get to that top, and you have to make a significant amount of money, a bit of what we call fuck you money or whatever you want to call it, and then be able to diversify. And then it's really about wondering how you're going to diversify and the ways in which you're going to do it, because the elites and people who are very wealthy, the guys that I know who are significantly wealthy, are looking at ways to lower their tax burden, that all of their income becomes their income, not the government's, not a 35% tax rate. Going offshore, becoming residents in places like the Virgin Islands, becoming residents in Bahamas, in Singapore, Dubai, tax-free havens, you know. And so that's more important, I think, than first diversifying. You know, sort out how you're going to cash out. You know, sort out what's going to be the most tax-friendly countries for you, and then from there, you know, look to diversify.
Yeah. So do you think, we've already talked about CBDCs being the main way that we get paid and buy things. Do you think a day will come, let's say certain cryptos get approved, what's the word? Well, the government like verifies it.
Yeah, so
do you think a day will come where people transact? Do you think a day will come where people transact with decentralized digital currency, like using the MetaMask wallet as they do, like just with your Barclays chip and pin? Good question. I think most banks will take on a form of wallet that they'll create, but you're starting to in the States you really see it. JP Morgan just trademarked a wallet for themselves, a crypto-based wallet. Right. Fidelity already offer services. Bank of America already offer a service for crypto, and they're the second biggest bank in the US. So JP Morgan being the biggest, Bank of America being the second biggest. So they understand that there's a market there, that people want to purchase crypto. And what you're going to start to see is a lot of the 401ks, and you're already seeing it now with BlackRock, you're starting to see it now with Fidelity, is that they start to diversify a lot of the 401ks into crypto. About 5% of the money that they're diversifying with is going into crypto. So yes, you'll see that in decentralized finance. But the real issue is how the government embraces decentralized finance versus centralized finance. And it's in collision with each other, right? So a lot of the things that we believe in terms of DeFi is like, we don't want governments controlling it. We don't want people to have your admin keys. We don't want to give away our admin keys to someone. We basically want to hold it for ourselves and create ways of earning yield and making money from price appreciation. That's what we like. Governments definitely want a lot of control over it. They want to be able to issue digital currency from their centralized banks rather than someone making it out of thin air, you know, things of that nature. So the ideologies and the ethos clashes. How do I see it getting rolled out? So here's what Vitalik says about it. Vitalik was talking about it and he goes, well, I don't think that the world will just change to DeFi. I don't think it will just all embrace it. But there's always going to be a black market for something, right? So in the past, cash was kind of like that black market, right? In the past, you know,
there's always been a black market. There's always been a way to transact without using the monetary system that you have in place. So I think it runs alongside CeFi. I really do. I think because it's way ahead of what's coming. It's been ahead of CBDCs for a long time, and governments are consulting crypto in order to how to run a CBDC or how to create digital currency. So there's some rumors that USDC will be the CBDC of America. If you look into Ripple, if you look into who's behind CBDC, sorry, not CBDC, excuse me, USDC, then you start to get a feeling that it was a rollout already by the US government and it's already in play, right? That they're trying to get rid of other stable coins such as DAI and USDT. They're trying to get rid of them and become the number one stable coin in the market, which would be USDC. And that would give them control over a lot of crypto, because that is the major stable coin. So that is likely to be rolled out. In the UK, we have Bitcoin already. So that is likely to be rolled out. Bank of England have plans to roll it out by possibly 2025 or maybe 2030. They're already recruiting for a head of CBDCs. They released a paper yesterday on HM Treasury have released a paper on CBDCs in the UK. So here's the crazy part, right? Like, CBDCs are not crypto, and people really need to get their head around this, and it's really important to get their head around this, that what's coming is way worse than what we've had before. So they're talking about having a limit of 10 to 20k maximum in the UK on a CBDC. So let's say you got 100k, let's say you inherited a significant amount of money, that you can't hold more than 10 to 20k in digital asset, in a digital pound. Right, and they may even lower that to £5,000, which is insane. Then on top of that, you've got carbon credit scores. So this will be a carbon score that kind of gives you credit based off of your carbon impact. So we start to see it in Oxford, right? In Oxford, they're creating these zones that you can move around in, but you can only go to certain zones a certain amount of times per year, and to reduce your carbon emissions. And let's say you like steak, right? And I'm going to just play this out. Let's say you like steak and you like to eat steak on a daily basis. Well, if you eat too much steak and it causes too much of a carbon issue, then maybe you don't get issuance of your monthly CBDC. Maybe you don't get access to loans to go buy products and services and assets and things of that nature. Maybe you're not a good humanitarian individual. Maybe you're rebelling against the government. Well, your credit score could go down because of that impact, and it could affect your CBDC. It could affect the amount of CBDC you get. They could freeze it. They could pause it. They could stop it. They can take it away from you. They would control the issuance because it's a digital currency. You can change the coding of it. You can... which is very different to DeFi, right? DeFi is on the blockchain, but this is the scary part about CBDCs, and I don't want to make it a stream all about CBDCs, but it's not looking good. It's not looking great, and I think a lot of people will move to that system, and they will incentivize people to move to that system, right? If you said to someone, "Hey, you got cash? Hey, bring it in. You give us $100 or £100 worth of cash, we'll give you 150 digital currency."
Yeah.
Well, what are you going to do? If you're a pleb and you're broke, you're going to go grab as much cash as you can and switch it.
Do you think, because I know gold coins can actually still be used as a form of payment,
right?
Do you think they'll stop that?
Gold coins as in like physical gold?
Physical gold coins, yeah, can still be used as a form of payment. Okay. When these CBDCs get rolled out,
can you pay it in most shops?
You can. Yeah, it's legal tender. Gold, physical gold is legal tender. Yeah.
Try it in Starbucks, man. I'd be interested to see.
I've never done it, but I know you can, because I was looking into buying some physical gold, and it says it's legal tender. Yeah. Yeah, which I found really interesting. So
you know what's also legal? You know what's also legal tender? Cash.
Yeah. Yeah.
But people are refusing to take it. Why? So
exactly. Yeah. So that
we can say it's legal tender, right?
We're moving away from that physical. Yeah. Which before fiat came in, we used to trade in goods and services, and you could build your physical world around you. You could build your wealth slowly, but it just feels like it's all kind of being sucked away into that utopia. Well, not utopia, that dystopian reality where you basically own nothing. You rent everything.
Correct.
Yeah.
Yeah.
Like in some countries, crypto has been banned, like China, Egypt, Qatar. Can you see that happening in the West?
How can you ban it?
Banned from being used.
Yeah, okay. Banned from being used, okay, but it's still being used, right? So, so my argument, I find it funny when people say it's banned, right? There are ways behind it. I can promise you that there are Chinese individuals who are transacting in crypto using a VPN.
Right.
Very, very simple, right? There's always ways around it. And a pure example of this, I was watching a documentary on crypto and the blockchain on Amazon Prime. And there was a girl who, I don't know if I should share it. Well, I'll share the story, whatever. There was a Chinese girl who was basically sexually assaulted in China, and she couldn't speak up about it. She didn't have free speech to talk about it. So what she did was she did a transaction on the blockchain, and in the transaction she coded a message, and on that message it explained the school that she was in and who, you know, the whole story on the blockchain. And so people saw it on the blockchain. They were able to see it and identify the message, decode the message, and see the whole message as well. So it was a form of free speech and brought light of what was going on. So could you see people trying to ban it? Yeah, I mean, they Russia's banned it, they ban it, and then it's funny to me, you know, all these countries say that they can ban it, but how are you going to ban it, right? Like, with all due respect, how can you? Maybe you take someone's ledger from them, but it's immutable. It's on the blockchain, and so maybe
what they could do is prevent your CBDCs from working, from being able to buy crypto.
Oh, I have no doubt whatsoever that CBDCs won't allow you to buy DeFi. I have zero doubt. But at the moment, take your bank account now. Can you buy crypto easily?
Yeah.
I'm telling you right now, the main banks that you use, it's almost impossible to buy crypto.
Right.
If you take so like a HSBC, a Lloyds Bank, something like that, it's almost impossible to buy crypto.
Really?
They stop you from purchasing crypto. Only the newer banks are allowing you to do that. Things like Monzo, things like Starling, things like. And I'm using a UK example.
Yeah.
So many issues.
With Barclays, I haven't had any trouble, but that's Barclays and Commonwealth Bank are the only two banks I bank with. So.
It's ridiculous, man.
Wow,
it's absolutely ridiculous. Yeah, so many, and this is happening in the US as well. Like many of the mainstream banks, the US are starting to open up their own services towards it, but it's incredible, man. It's like crazy that you can't make purchases with purchases with your credit cards to buy crypto.
Yeah.
You can't make purchases, you know, in certain places. It's very, very hard. So, so the system that comes in, it's going to be way harder to buy DeFi. You know what people classify as DeFi.
Mm-hmm.
But I think there's always going to be a need for it, right? Because there are going to be people who don't want the new system coming in. No one wants to transact with CBDCs. There are going to be jurisdictions that are going to be crypto friendly. There are going to be jurisdictions that are not crypto friendly. So it's really about which place you want to be in and go to a place that treats you best.
I agree.
So interesting.
I'm moving out of the West. I plan on leaving the West in the next 24 months.
Yes, that's a whole different subject.
Yeah.
I mean, it's not always a utopian future in certain places. You know, there are always going to be issues in other places as well. And I know that the narrative is that, hey, you know, you can find great stuff in Eastern Europe, you can find great stuff in Southeast Asia, great stuff in South America, things of that nature. I think what makes them quite great is that a lot of those societies are just haven't progressed as quickly as the West.
Yeah.
So, and we say progress, but as in technologically speaking, still very slow to progress, and it makes it much better because, like take Thailand for example, it's all cash-based society. So that was the big shock when I was in Thailand. I was in Phuket, and I'm like, damn, I need to take out cash everywhere. There's no place where I can just tap my card. It's a pain in the ass. And if I do tap my card, it's going to be a massive transaction fee. So I think that's why a lot of people like it. Simpler living, back to the kind of older ways of mentality. But again, there's going to be issues, right? There's convenience within the West as well.
Of course,
But yeah, if you're looking for freedom, go to a place that treats you best. Nomad Capitalist talks about that all the time.
Yeah.
Great YouTube channel to check it out.
Yeah. Get multiple passports.
If you can.
Crypto got a lot of bad press because of the FTX crash. There's a lot of theories as to why that happened.
Yeah.
So what can someone do in order to protect their coins from being lost on a bad exchange, or maybe their MetaMask gets hacked? Like, how can someone prevent that from happening?
Well, let's be clear about what are the ways that people get hacked and scammed, right? So most of it's phishing scams. So it'll be like you'll be on Twitter and some MetaMask support is messaging you and going, "Hi, I'm from MetaMask support. We've had a problem with your wallet. We'd like to help you out. Can you tell me your seed phrases?" It's a bit stupid, right? Okay. Yeah. Here you go.
Don't
seed
do that.
seed phrase 1. That's like giving away your PIN number for your bank account, right?
Yeah.
So that's one way that people get scammed. The other thing is there are protocols out on the web where they'll say, and it can come from excuse me, a YouTube channel where it can be like, if you send this amount of Bitcoin, we'll send double, 3 times as much back. Excuse me, I'm going to cough again. 1 second. Excuse me. So, I see this kind of bullshit all the time where it's like, oh, send money to this wallet and we'll send you back 3x.
Who does that?
No, but early internet, it used to be like that. If you remember early on, a lot of people did that kind of stuff. So, that's another one. You can help yourself by having a hardware wallet, but a hardware wallet, like a cold storage wallet. So you have like 2 points of authentication. You have on your MetaMask and also another form on your hardware wallet, like a Trezor or Ledger. But these can break. Those can get burnt down as well. Also, another way is, and I would say, like, put your seed phrases, write them down. But, that can still, your house can burn on fire and you can lose your paper, right? You can lose your passwords. So you can get titanium plates and you can write those seed phrases down. And you could have both, like, half your seed phrases on one titanium plate and half your phrases on another titanium plate. And you could put one in one location and one in another location. But coming back to not getting scammed and things of that nature. First and foremost, use crypto exchanges, particularly centralized exchanges, like you use a public toilet. Get in, get out, but don't linger for long. Okay? Yeah. Use it and then get out. So that's the best example that I give. So for example, a crypto.com, a coinbase.com, a Binance Smart Chain, I don't know, Binance Wallet, what else is a big, KuCoin I think is another exchange. I'm trying to think of big exchanges off the top of my head. Anything that uses, like Swissborg is another one. Just get in and get out, right? So what you want to be doing, it's easy to buy and purchase crypto because it has a fiat on-ramp and off-ramp. So it's really easy to bring money in and take money off. However, you want to be putting it onto a decentralized wallet. So, for example, MetaMask would be one. Orex wallet would be another one. Brave wallet is another one as well. So you want to be making sure that once you buy your crypto, let's say you buy Ethereum on crypto.com, that you then send it to your wallet, your MetaMask wallet or your Brave wallet or your Orex wallet as quickly as possible. And then you've got it much more safe there. Be careful what websites you connect with. Be careful where you're connecting with. You don't want to be connecting with a load of wallets. Obviously, it gives you, on MetaMask, it shows you and allows you to connect to those websites or not. So be careful where you connect. Just make sure it's fairly legit. Be careful with airdrops. Be careful with things of those nature. Make sure that there's due diligence done. So that's what I would say, right? Get a decentralized wallet. Use exchanges for quickly on and off, like a toilet, in and out. And what was the third one I said? Try and get a hardware wallet as well, called storage wallet. Fourth one, if you really want to be safe, go get a titanium plate and put your seed phrases on that as well. So yeah, be careful out there.
Yeah, because there are a lot of scams in crypto. There was Luna went to zero, Terra USD collapsed. Yep. Is there anything people can do to? We obviously don't know. We can't make every good bet out there. We're going to make some mistakes, such as life. But is there anything anyone can do to prevent themselves from getting into a bad project?
Research, really trying to dig deep, ask a lot of questions, try and see the code and understand the code as well, and look at the contract itself. There are a lot of people that do look if they have audits, so it needs to have significant audits on the project before it gets released. That's another key important one. What else could I say? I mean, True DeFi is a magical place. It's amazing because you're able to earn yield trustlessly without interacting with a protocol, rather than having to interact with like giving your keys away and giving your money or your crypto away in order to get a 10% return a year or 20% return a year or whatever it is. So I like good fit DeFi projects, and just do a lot of research and due diligence, before you connect to those protocols and before you stake on those protocols. I think that's probably the best way to do it, really. And then try and understand code, or try and read some of the code behind it, or get someone who does. But audits are usually a good sign of a crypto project. A lot of good audits that are done prior to the project release.
Cool. I think that's a good place to close the show. So yeah, it's been awesome having you on, man. Cheers for jumping on the call. Appreciate and doing it.
I know we covered a lot of subjects.
We covered a lot. I could talk for another hour, but I don't want to keep. I want to keep it around this length, so I think that's about perfect. We'll have to do another one sometime. Yeah,
I'm more than happy to do it. Yeah. And I know you had a gold guy on, and he said it was the best asset to buy into. I completely disagree with him.
He's all about diversification. Put 10 to 20% of your net worth into precious metals. That was his advice.
Fair enough. So, if it's about that mark, that's cool. I just saw the clip.
No. So I was watch the whole thing. You obviously just watched the first 5 seconds of that.
I did. Yeah.
If you listen to it to the end, he explains just 10 to 20%, 10 to 30%.
Because I don't think it's done a 2x since 2015.
It's just very stable, isn't it? It's gonna just keep up with inflation, basically. Mm-hmm. So yeah, it's like wealth preservation, I guess. Like it's like an insurance policy.
He definitely listens to Peter Schiff, huh?
Yeah. Well, he's Swiss. He's from Switzerland, so it would explain why. They've got
that's all right. If you're Swiss, 0% tax. Income tax,
exactly.
I believe. Yeah.
But he wants to move to Thailand. He's moving to Thailand because he works online.
Because Switzerland's expensive, man. It's not a cheap place to live.
No.
Great place to hide your money though, but there are better places. But yeah, it's decent. Thailand's nice, man. It's nice. Yeah. Good lifestyle.
Yeah, I'm looking forward to going next month. It's gonna be good. Well, actually, it'll be in April. I'm going to Bali in March, and then Thailand in April. So yeah, it's gonna be good.
Yeah, I think Southeast Asia is cool. It's a little bit like old school in the way that it runs, but that's good. Sometimes like older can be better, and you'll have fun. It's gonna be great.
Yeah, cool. So where can everyone find you on socials?
So you can find me on Twitter, YouTube, Rumble. What else?
You're on Rumble.
Telegram, Money Gang Crypto. Very simple. You see it in the bottom corner there.
Yeah.
Money Gang Crypto. We also have a Telegram chat. So just to give a bit of pretext, I am a bit of a Pulse Chain Maxi. I like Richard Hart products. I talk significantly about those products. Doesn't mean I don't talk about broader crypto, but that's my niche. So we have a Telegram group chat. It's called t.me/moneygang-cult chat. That's Money Gang Cult chat, as in a cult. You can find that there if you're on Telegram. But if you want to see my videos, the best place to find me is just Money Gang Crypto. You'll see it. It's a bit eccentric. It's a bit fun, but you'll see me there. And it's growing, man. I've grown, nearly to 2... This is a niche that's quite quiet, so I'm just going to tell you, in a bear market, I've grown to 2.5k in like 6 months.
Yeah.
So we'll see
fast.
We'll see 10k by the end of the year, I reckon.
Yeah, I reckon. If you keep going at the rate you're going, you post consistently. I never see you miss a day.
Try not to, man. Trying to post twice, 3 times a day if I can, but
wow,
that's the way you grow.
How do you do it? I don't know how you find the time.
There's a clone of me. I have a twin, and he does, the night shift. And AI helps. Yeah,
AI
helps,
robot.
Man. Yeah, you can do it like that. But I feel the need to be successful, man. Like I feel the need deep down that, I know we've talked about these big principles and these big ideas on stream about, that the world is kind of collapsing and it's a bit dystopian. And for me, I feel an urgency or a sense of urgency that I have to be successful. Regardless of what happens with the crypto side of things, I have to create a brand. I have to create products around that brand. I need to be creating something for myself, be independent and escape the matrix.
Exactly.
All of that fun stuff. So my drive is that, right? It's this idea of, man, I need to be successful and I need to do well. So that's where it comes from.
Yeah, because on one side of the coin, we're saying that how everything is like pretty screwed, but we've also got the internet. It's the most opportunity we've ever had in the history of mankind. So make the most out of that, because we are pretty much early adopters of the internet at this stage. So we don't know where the web is going to be in 50 years, even 20 years. So
you've got the greatest access to information and knowledge. You have access to audiences that you've never had in the past. You have access, so many tools on the internet. So it's great, man. Get building, keep going.
Yeah, for sure. So guys, make sure you subscribe to this podcast, share it around, click the thumbs up button if you enjoyed it, hit the subscribe button, and I'll see you on the next one. Peace.
Cheers, guys.